you so much for your time. Now, just, so many question marks over here at 9:20 thereabouts when, the outcome really came. Firstly, what is this MF Lite framework and how does now life change after this?
Yes, Aisha, first thing is when I read this circular, not just superficially, but in depth, one thing which very clearly comes out, that you're progressing. Every circular, I try to classify them as regressive or progressive.
Okay.
And this is truly progressive. Of course, somebody might agree, somebody might not agree. But there is still, you have to ask yourself this question, are we moving ahead? At least in your whatever opinion.
Yeah.
In my opinion, it's moving ahead. Why? Because there's clarity of thought, right? MF Lite framework, like that's one topic if we take up in the circular, very clearly says passive indices and the funds which are aiming to replicate it will have easy approvals. That means ease of doing business.
Sure.
Right? That implies that lower cost products which don't have human judgment should be approved faster because there's very little for the regulator to do. So that's in the direction of the right thing. But one thing which concerns me on the same topic is that today indices can be created and then you create a fund to replicate that index to take a shortcut. For example, you can create an index with an index provider on tourism. And then you can say all stocks in NSE 500 which are related to tourism will become an index. And then 5 fund houses can get an approval in a jiffy for this index.
Yeah.
So it is not humanly managed, but it's a new concept altogether. Out in the market very quickly without a regulatory, without that kind of depth of regulatory framework.
Intervention, yeah.
So if you told me that MF Lite is for all indices currently available, any innovation will require more regulatory scrutiny than I'm just trying to tell you the flip sides of a long term. So I personally think MF Lite is a very, very brilliant concept. Why is it a brilliant concept? One more point is, today you see, everybody speaks of index funds.
Yeah.
There are 2 issues with index funds. We might have close to 250 index funds or passive funds, but the 88% of the assets are between Nifty and Sensex.
Yeah.
If 88% is in 2 indices and the rest of the indices have 12%, then it is only optically diversified, but it is not diversified. So
Too concentrated.
So concentrated. And top 10 stocks of Nifty have 65%. So you're basically pumping more money into the top 10 businesses of the same company, like in the US.
Yeah. So double-edged sword, as you flagged it off as, and I wanted to get in your take on this new asset class or product, as you said. This is with respect to HNIs. It's called investment strategies. What are your views on it?
My views are on twofold. One is, I think it's a precursor. If you read between the lines, this asset class, as they call it, but I would rather call it a product class because it wraps an asset, which is a derivative or a cash market stock equity, right? So one take is that it is a precursor for some curbs. One. Second, if you're a retail investor, be rest assured that derivative will be not your baby. If there is going to be 10 lakhs as the limit for an investment strategy, as they've tried to name it, then giving derivative access to a guy who has only 5,000 rupees in his bank account to buy an option may not be it will be very dichotomous. So one precursor, if you're an HNI, you will get a more professionally managed portfolio. HNI, I don't know what the definition is from the retail standpoint. So 10 lakhs is the minimum investment. And retailers should be prepared for some curbs. That's on the read between the lines. I'll probably touch upon more.
So I think, the understanding and the thought process is the same. It's not been changed. That, a small retail investor should not be dabbling in the F&O market. Only if you have a certain bank balance should you be looking at, because you obviously have a better risky appetite. What is the way or the correct way to do this? Will there be some sort of MF or mutual fund alignment when it comes to F&O eventually to try and curb retail participants?
No, I think, let me take a step back and explain to you as a concept, why should a retail investor not participate in derivatives? Okay, I have a very strong feeling.
Okay.
Right? Because when you tell somebody don't participate, it is a negative psychology. It's like telling a child that don't put your fingers into the electric socket, right? Of course, he's going to hate me for it. He or she is going to cry.
And it's the first thing when your eyes away.
But I have to also give him a replacement with a toy, saying that, okay, you don't put your finger into an electric socket, but here goes the toy. First, let me explain to your viewer, why is derivative not a fair play for a retail investor? See, derivatives are instruments which require you to understand something called Greeks. Okay, what are Greeks? If you Google, you will know. But most of the people who dabble in derivatives don't even know Greeks. Greeks are alpha, delta, gamma, vega, theta, rho. These are 5 Greeks. Somebody has put his lifetime earnings and he doesn't even know the definition of Greeks. Yeah. Then there is something called second order Greeks, which is called vera and veta. These are 2. So these 7 things a person doesn't even know and he's dabbling his hard-earned money. The other person who's an institutional investor, the person who lost 1.8 lakh crores, there must be somebody who has made that 1.8 lakh crore. That is an institution who has done a 3-year course on this, right? And created algorithms and AI to make sure that you have an unfair advantage on the rest of them. That's what they're trying to curb. And I personally think that regulator can't just see this as a parent and keep quiet, saying that this is happening, because you have the information that who's winning and who's losing and why are they losing.
So do you think if they spell that out, then it would be, it would curb, well, not curb as you said, but it would at least deter retail?
I think it'll deter retail, but I think the regulator, one expectation of mine, fair or unfair, I don't know, is that a clean explanation of why there is a curb. One is to tell them that you can't do it. Why is it unfair? Of course, this research report is a great first step. You have to explain why are 94% of them losing. That needs to be explained. And I personally think I've sat on a derivative terminal for the last 20 years every single working day. And I can tell you that it is like an insider trading in a derivative. If you're betting against the house, he or she as an institution has so much more bandwidth to have an unfair play.
Yeah, and it's not everyone's cup of tea.
Absolutely.
To begin with.
And I think institutional is right in doing it because they have more bandwidth, economies of scale and understanding. They're not wrong. It's not like a clean conventional insider trading. It is knowledge-based trading, which is why I think retailers should curb. And before you close that, the regulator has given another solution for at least 10 lakh rupees with a more flexible platform.
But that 10 lakh, can't it be leveraged? Because, one of the key contentions was that retail was leveraging, putting their hard-earned money and then dabbling into futures and options, which they don't understand. If 10 lakh is the only criteria, that can be coughed up.
Yes, see, when you look at this platform, what has the regulator done is in July they've got the first consultation paper. And now we are sitting in practically in October. Right, so they have taken 2 months to understand from asset management companies what is the liberal framework you need to quench the thirst of a higher risk, not higher risk from 0 to 100, higher risk from 0 to 20, because mutual funds as is, the regulator does not permit selling of options. You can only sell options if you have the same underlying instrument. You can buy options. People have been buying options. So the mutual fund is near no usage to investment strategy. So they've done a lot of homework asking all asset management companies to submit their ideas on this more liberal platform. And that's when I think the framework, when it comes, will incorporate all 10, 20 asset management companies' ideation will be consolidated to create the framework. It's like bottom up regulation, which I'm happy.
Do it, but do it safely, is all that the regulator is trying to say. The other thing, and I want to get back to the MF Lite framework. Do you think that's also going to somewhere instill and more align with this F&O curb eventually? Stay put in the market, don't try and dabble it and, be a short-term player over there.
See, there are 2 kinds of investors. One who don't have capital. Then if you have only 15,000 rupees, then you are trying to say, let me go to a casino, at least get to a lakh, and then I will think of investing.
Put it in.
So now I can't blame the guy who's dabbling because he says, मेरे पास capital ही नहीं है. Right? 5,000 होगी, 1 lakh होगा तो कुछ investment करूँगा, कुछ पैसे बनेंगे. Right? So that will never be addressed. And if you're looking for that, you have to go to those betting apps. Okay, capital market is not for you. You bring in some capital, some regular income, work hard, and then use this platform to keep it safe and grow it over long term, create wealth and not money. If you want to make money, which is like quick money, capital markets are not for you. That's the message I think we should give to the Indian youth.
And on the flip side though, Feroze, we have seen the SIP flows which are at record levels, at least the kind of numbers that are coming in. Retail interest does remain very strong over here. So what's your view on equity just as an asset class? Will it continue to remain the preferred asset class? Do you see an opportunity for debt? Is that picking up?
I think debt in India has been overdone, right? Because the government wanted to fund its fiscal deficit. The foreigner would never lend to Indian government. Just now, for the last couple of years, he has even thought of including us as an investment grade. So who would fund the country? Indian retail. So debt was a very loved asset class, not because the people were loving it. We fed into the system saying that debt safe rakho apna paisa. Right? Because we had to run our country, and which is the right thing to do as a government. So now I personally think debt is overexposed. In the financial assets of 410 lakh crores, we are speaking of 93% in debt, only 6.7% in equity, both direct equity for households and mutual funds. So if the formation of the paradigm shift is happening, will it end at 9%? I think it will be stupid if India ended its equity allocation at 9%, at least on the financial asset side. So it should go up significantly, and I think liquidity will be ample, but I think there will be its own surprises during this, because liquidity creates bubbles. Now I was very happy reading a article on your own sister company's newspaper, which says that there's 50,000 crores of IPO coming this Diwali.
Yeah.
Good companies are needed in this country to absorb this kind of liquidity. Otherwise, we'll have bubbles which are uncalled for.
And
So you're saying Hyundai Swiggy will mark a little bit of a rest for the market.
Hopefully.
Yeah. Okay. Since you do handle HNI money in large chunks, I wanted to understand what other kind of innovative products do you think that the system does need right now?
Innovative products, I think in the HNI market, innovation is overdone.
Okay.
Retail, innovation is zero. Unfortunately, both are operating at the diametrically opposite end.
Opposite end, yeah.
Okay, if you look at the top 5 wealth managers in this country and their allocation to debt and innovative products, on one hand, the client is buying debt, which means he is safe. In the same portfolio, you see private equity, unlisted share. It looks like two separate human beings' portfolio. Right? So I think innovation has quenched the thirst of intellectual stimulation for an HNI more than the risk reward. So coming back, I think HNI and Ultra HNI have all the innovation already. I think there has to be curve of innovation. But for the retail, you can't say you're too poor to innovate.
Yeah.
Right? If you innovate, you will become rich. So I think they need to come somewhere closer to each other. I think HNI and Ultra HNI need no more innovation. People are buying unlisted Swiggy stocks.
Yeah.
People bought Farm Easy unlisted stock, which went from 120 to
lost so much
57
money,
rupees.
yeah.
Some people bought NSE in the unlisted space, which quadrupled or even so. But do you need so much complexity when 80% of your money is sitting in debt? You move 20% to equity, your returns will go up. You don't need so much innovation.
It's quite interesting. The other thing I also wanted to talk about, that 200 rupee SIP also may be introduced, and we touched upon it last time you were here. What kind of market does this open up? Because that's somewhere trying to be an equalizer as well, that if you don't have that much money, doesn't matter. You can go via the MF route and participate in the Mega Equity India Bull Run.
I think that's a very good move. See, if we have to, as a capital market, not serve our each businesses, have to serve the country and its people, and country is made of people, I feel very passionately about this. If you look at how India saved, why were chit funds so popular? Because somebody in the evening would go through the market, collect 40 rupees every day, and make his savings, and which does not pinch one's pocket. That's how all these unstructured saving instruments became so popular in India. If a structured, regulated platform allows you to invest 250 rupees a month, it's a very good thing. I think asset management companies are thinking, I spoke to some CEOs of asset management companies, and they are not concerned about their profitability, and it's such an honest, good thing to do, because profitability aayegi. You don't, if insurance business you start 9 years, 10 years, you're not profitable. That's the kind of longevity a business has. Like DP sir was there in your show. He says, I am very happy to break even on the 250 SIP 5 years from now. Everything does not have to be profitable. AMCs, 4 or 5 listed AMCs, you look at their profits, can they afford to contribute to the country? I think 250 rupee SIP really excites me to expand the universe, to even in the lowest strata, be the house helps or even lower. for that matter.
Feroze, since you have a pulse on, which way the retail behavior is moving, and of course the HNIs and ultra HNIs as well, and the kind of, risk appetite, like you said, especially in the unlisted market, in the kind of IPO frenzy that one has seen play out, the kind of teasing moves that, the debut days make, and, the stocks never fall since then. And some of them which have collapsed as well, Farm-Easy being one such case in point. What is that telling you about the structure and the nature of the market right now and the mood per se?
The mood is not risk off, risk on. People are loving risk because they've recently been rewarded for the risk.
Yeah.
Right?
They've only been rewarded in the last 4 years.
That can be scary.
That can be very scary.
Yeah.
That can be very scary.
Since COVID lows, you've not seen a dip, barring few odd days here and there.
Correct. But I think because this kind of market rally is also coming also combined with discipline on SIP, and there are not two mutually exclusive. The guy who is dabbling in derivative is also having an SIP.
Yeah.
We should not see them as two different human beings. When I meet a person, I just, in any of these retail events, just to educate them, when I go, I said, "Aap kya karte ho?" To bolta hai, "Derivative bhi kar raha hu." My SIP is lasting for 6 years. If he was saying only derivative, then I would be very, very perturbed and I would be very paranoid, because the guy is actually acting like a double role.
Yeah.
He's also being a dabbler and he's being very consistent with his investments. So gives me that santvana, the peace of mind, that not that everybody wants to risk his complete savings. They want to risk some to get the adrenal and keep a larger 23,000 crores, like Awan madam said, is coming into SIP.
Yeah, all things good. Play it safe. That's the only messaging. But great having you on the show and
Thank you.
helping us break down what SEBI's intention is, and all in a good direction. Quick break then.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.